Hello, welcome to Accounting 2010 Chapter 7 videos. In video 1, we're going to be discussing the petty cash account. So what is petty cash? Well, petty cash is a small amount of cash that we keep on hand in our office or in the back room somewhere with somebody who's responsible for it so that we have some good internal controls watching over this amount of money. But we keep some cash around to pay for small expenditures so that we do not have to write a check or use credit cards for every single transaction. And the type of expenditures would be if somebody makes a delivery to us, if we need to go pick up some small supplies, some stamps for the office, or perhaps we want to throw a small pizza party for our employees to boost morale, something of this nature. So typically petty cash is an amount of cash that would be used within 1, 2 weeks, or perhaps a month if you do not use a lot of petty cash. And the normal amounts are usually under 500, typically closer to 1 to 300, but it can vary from business to business depending on the needs of the business. So we keep our petty cash in a locked, safe box somewhere where fingers cannot get access to it easily. It is one of the places where some fraud within a company can occur if too many people have access to our petty cash. So we want to keep it locked in a box and perhaps even locked in a drawer. When I have been in charge of petty cash, I have kept it in this type of box in a locked drawer with only myself and my supervisor having a key to the box. So one of the things that we want to do is we perhaps want to set up a petty cash request form. Now this form I got out of Excel. It's a standard form in Excel, but if you ever become in charge of petty cash, you would want to have some kind of a petty cash request form that would indicate who had taken money out of the box and how much, and who had approved of that money going out of the box. So you would take this petty cash form and put it and replace it with whatever money had been distributed to an employee for their requested purchase. Another thing that you might want to do is keep a petty cash log of where the money is going in and out, and it's just a nice way to have an audit trail in case somebody wants to know exactly what has been done with the money. Another thing that I've often done is to sign the back of any receipts, have the employee sign the back of any receipts that they return for the items they purchased, any kind of information that would indicate what that money was used for. So you have your receipts and you would sign it. You have the original document of the request for the petty cash. You can keep track of it in the petty cash log. So you want to have a lot of details about where this cash is going in and out. Well, each purchase may not be a lot. Over time, if you're using $100 or $200 every couple weeks, that can add up to being several thousand over the course of a year. So you want to keep track of where that money's going. So at the end of a period of using petty cash, we need to record that petty cash into our general journal. So I want to go ahead and take a look at what are the journal entries with petty cash. Well, when we first established the petty cash account, we are going to debit petty cash and credit cash to show that $300 had been put into an impressed petty cash account. And what an impressed account is, it is different definitions. One, it could be a loan, so cash is lending out petty cash. It can also be a holding or a small little holding of cash. So we call it an impressed account if you hear that term, and it is a loan or a small holding account for a sub-account of the cash account. And we only will hit the petty cash account. Whoops, let's go back. We will only hit the petty cash account at the time we establish it, or when we reduce or increase the account. We do not go back to the petty cash account to show that money has come out of it. That will go back to the cash account in order to replenish the petty cash account. So remember this in a test question. You hit the petty cash account a debit when you establish it, or if you increase or decrease the amount. So this was done on the 1st of January 2015. We established our petty cash account. Then on the 31st, we're going to record those receipts that have come into the petty cash account during the month. So in the case of this, we're looking at Roadrunner's Roost. once again, and Roadrunners Roost had established a $300 petty cash account. And during the month, we had had the need to grab some cash. Maybe the Boy Scouts or the Girl Scouts or a school came around and said, you know, if you will give us $45, we'll put you in one of those coupon books. And so we had just given them some cash of $45 for an advertising expense to put us into one of those coupon books. Another thing, we found out that we had run out of some paper or some ink, so we sent one of our employees down to the store and they picked up some ink, and there was a receipt in there for ink. And we had bought everybody some pizza after we had performed an all-day training session for the MSU Denver athletes. So we tipped the pizza boy, and we had bought $92 worth of pizza. So we had these receipts in the petty cash box, but we also found that we had $115 in cash. So, which would make sense. 115 plus 45 plus 48 plus 92 would have equaled the $300. So what we discovered is, since there's $115 in cash in the box, we needed $185 in cash to replenish the petty cash. Then we want to reconcile that, in fact, those receipts were equal to $185, because sometimes the amount of cash we have in the petty cash box does not equal the receipts. So the first thing we want to do is look at how much cash, and how much cash are we going to need to replenish it to the established amount, in this case 300, and then we're going to reconcile that the receipts in fact equal the amount needed to replenish the box. So what happens if the receipts do not equal the cash? And sometimes they don't. Sometimes we've shorted somebody on cash. Sometimes a receipt turns up missing. There can be lots of instances where it does not equal cash. And in that case, you also do have to look at some of your internal controls as to why you're not equaling the amount of cash in the box with your receipts. But nonetheless, it does happen. So in this case, I'm going to give you an example. We went to the petty cash box and we looked in there, and there was $192 worth of cash, but we only had $185 there was only $108 worth of cash. We needed $192 to replenish it. This is the amount to replenish it. We had $108 of cash in there. We knew we needed $192, but there was only $185 worth of receipts. Where did that other $7 go? Well, maybe we don't know where it went. So we're going to have to debit an account to make up the difference, and we use an account called cash over and short. And cash over and short will be that miscellaneous expense or a miscellaneous revenue if we have too much overage of cash, of which we can use as kind of a place to keep track of any cash over and short. And if any of you have worked around cash registers, you know that your registers are some days over, some days short, and so this could also be true of cash registers. So the important detail here is, if your cash in your petty cash account is not reflective of the amount of cash you started with minus the receipts, it's going to have to go to cash over and short. If we go to the next example, in this case, went to the petty cash account, and we saw that in the box there was actually $122, and we had $185 in receipts. 122 plus 85 is actually 185 is actually equal to $307. So we've got $7 too much in the box. So what do we do? Well, we only need 178 to replenish the box, and we're going to go ahead and credit that extra $7 to cash over and short, the amount of cash that we had over in the petty cash box. And this way, this will now balance to where you have the amount of money, the amount of cash actually needed to go in the petty cash, the amount of cash that was over in the petty cash box, and then correctly taking those receipts and journalizing them to reflect the expenses that we had incurred in using the petty cash to make these purchases. So this is an overview of the petty cash account. The next video is going to talk about bank reconciliations. These are the two key concepts in Chapter 7 that you will need for your exam.